welcome to HSBC India Investment Summit in association with CNBC-TV18.com. In a post-pandemic era where disruptions are the new norm, ESG and sustainability-linked investments, they have become a beacon for risk mitigation, building resilience and ensuring sustainability of the general people, profits and a lot more. Not just socially responsible investing, there is a lot more focus on asset management and ownership as well. We also have implications for investing as investors as well as companies. What we see today is a renewed definition for profitability, as it is a broad spectrum of investors on the sustainability front which reduces risk and enhances long-term performance. Boardroom discourse is being dominated by the impact and practices of corporate conduct beyond sustainable investing. Financial institutions, in their position to shape the future of the markets, are increasingly enabling and supporting their clients to realize the scope and opportunities in a low-carbon economy. Globally as well, institutional investors are leaning towards expanding their investment allocation to the extent of 71% in this regard. Let us understand now how this unfolds and what this would mean for investors and the economy. Please join me in welcoming our next panel. Do you think sustainable financing, sustainable investing, beg your pardon, that is something that will become mainstream now?
Today, there is a lot of awareness about sustainability of a business, not purely on its manufacturing ability, but its sustainability in the environment. So unless I have a business which will be around 20 years from now, 30 years from now, clearly the investment motive is got to be driven by that.
Mr. Sen, let me come across to you because HSBC has some targets in this regard. The target is to provide between $750 billion and $1 trillion. The amount is between that of financing and investment support to its investors in all sectors to transition to lower carbon emissions over the next 10 years. So give me a sense of how far ahead are you here in achieving this goal?
I think in the October of 2020, in our annual general meeting, we issued a guidance that we are going to commit up to between 750 billion to 1 trillion. The objective is very simple. These are primarily going to get channelized into three streams or to achieve three objectives. One is essentially helping clients in the highest emitting sectors and geographies transition to a net zero. I think that is where a bulk of the money will go in. The second part is our own financed portfolio of emissions. We are very clear and we are very committed that we need to bring it down to a level which balances the global objective of limiting the temperature rise to 1.5 degrees Celsius, which is what everybody is working towards. And overall, I think if you simply take away our large institutional clients, if you look at the broad client base, we are essentially talking about partnering our clients in this whole transition. Because when we talk about transition, we also see that as a very big risk. And this is a risk that we evaluate constantly in terms of our credit portfolio quality as well. Because we do see high level of financial and physical risks coming on account of this transition. And if this transition isn't managed well, this is going to have implications. And as a large global player in the international financial system, we believe that finance can have a significant effect in terms of doing good. And we are absolutely committed. Now, coming back to your question in terms of how far have we gone ahead, last year we concluded about 83 billion. And cumulatively between Jan 20 till now, we have done about 127 billion. So we are making very good progress, but I also wanted to highlight that even in India, we have made significant strides in this space. And I mean, I would like to believe that in terms of all banks operating in the Indian market, we are probably one of the leading banks as far as extending our own balance sheet for sustainable financing to our client base.
How do you structure your strategy around it? What are the core values? And is it a space that you look forward to more? I know the things that you just said, of course, this is something that has been happening for quite some time. It is given a different shape than what it's supposed to be. But in general, do you think it's more than what meets the eye? What is the strategy that a fund manager should follow here?
Sure. So our partners, Amundi, have been pioneers in Europe. in terms of doing whatever they do. We've kind of been pioneers here. We hired a dedicated ESG analyst probably 3 years back. We have a team of 4 analysts. We've got the entire equity universe under ESG coverage. We're also covering the entire debt universe. So almost our entire equity component is covered. So I know exactly that 97.3% of our investments in terms of value on the equity side are already ESG covered. In terms of what we do on the dedicated fund, we have basically, we look at it in 3 steps. The first is an exclusion principle, so we don't invest in sectors like tobacco, liquor, pawn, weapons, and I think the 5th one is, I forget the 5th one. Yeah, so there are 5 sectors that we exclude, we don't invest in. The second thing we do is we look at it on an incremental basis. So we are looking for improvers. So you have to look at sustainability in the context of India. When you're investing in India, you have to look at it in the context of whatever area you're investing. And we engage with companies in terms of improving their ESG scores. So we are already UNPRI empaneled. We engage with companies like NTPC in terms of how they can improve their score. So we are basically looking for improvement in a sector which is not excluded. And the third part when it comes to portfolio selection is basically within this universe, we kind of pick best in class in terms of how they get rated on these parameters. So we have our internal rating system. We use MSCI, for example, and we know exactly what percentage of our companies are rated where on that framework.
All right, gentlemen, thank you so much for joining us today. It was definitely a very interesting conversation, different views. So definitely we got a lot out of it. Thank you so much for joining us today.